I think it's gotten a little overdone in terms. It definitely is, no doubt, iPhone. But you're talking about a company that just gave guidance. In our opinion, the read through here from a face recognition perspective, it also could be on some of the iPads as well. Net, I think the street right now, is really expecting we could see maybe 200, 205 million units versus where they were at 220. So I think right here, what we saw was maybe a bit of an overreaction. But look, there's no doubt, ever since they pulled the metric, and ever since lower iPhone units, now this was sort of what I view as sort of the straw that brought the camel's back in terms of the bulls viewing that iPhone could actually see growth in 2019.
Goldman is cutting its price target on the company's stock to $209 from $222, but even that $209 is above where it's trading right now at $193. What are your expectations for the stock? How much of this is baked in at this point?
Yeah, I mean, I think, look, in our opinion, I think that's just one where you're seeing a lot of groupthink here. It's very easy for the cab driver to be bearish on Apple here. In our opinion, I think there's still a stock. Once we get through this on the services, as well as on the ASP-driven iPhone cycle, 240, 250, in terms of where we see this over the next 6 to 9 months. It's going to be a painful hand-holding period here. You're seeing nervousness across the board. We're seeing from investors. But in terms of, I see still the stock going meaningfully higher as it's trading on the lower end of the range, and ultimately I see the multiple increasing.
Ed, what do you think just about demand for the new iPhone?
Well, so I think you hit it on the head before, that they're getting rid of that metric. We're not going to see how many more iPhone sales, how many unit sales are happening. I think
that makes
that's
people
huge.
nervous. Yeah.
Huge. And also, it just, going forward, it just makes it that much more difficult if you're in the business to sort of figure out, okay, where are my estimates going to land? You're going to see a lot more pullback coming from there. It's a signal to me that Apple's saying, you know what, let's stop focusing on the hardware, look at our overall business. They've been talking about that. Services is a big part of their growing business. I
think
that's
a fair
what they
point?
want you to. It's a fair point, but I don't like having less visibility.
Well, can I ask just a philosophical question? Yeah. If you were going to do this at some point, if you wanted to move people off of this, do you do it when, when do you do it?
There's no good time to do it.
There's no good time to do it.
You're going to just pull the Band-Aid off, and you're going to bleed for a little while. It's not going to look good. Why did you have to do it at all? That's my question. Why couldn't you have continued to go on making that part of your report? Because that's what drives the company.
Yeah, that's what drives the company. What if they think that's wrongly what drives the company? If they think, I mean, I guess you're right from the perspective of just transparency. If you think it's services, then tell us more about the services.
And that's the thing. Let's start breaking out the services revenue, right? Maybe about a third of that services revenue, which is sort of the most steadiest growing, is going to be the stuff that Apple has control over, right? Sort of the advertising within their app ecosystem, the 30% cut they take on media sales within there. The rest of it comes from all the other sort of apps. All
right, let me play devil's advocate to that, too, because I'm kind of arguing it through in my own head right now. Look, if you've got Warren Buffett as a big new investor and he's not concerned about these things and that provides you cover, and he's saying don't be giving people estimates, don't tell people what you're going to earn because a lot of this is outside of your control. It's not that they don't want transparency, but they also don't want you to be telling us about numbers or estimates or expectations that you may not be able to meet because of forces outside your control.
If you want to change the narrative, it's their right to do it. You're going to see this sort of volatility happening in the meantime. That's what they have to live with.
Yeah.
Well, it's also the way they did it, because we give the street a heads up. Okay, starting in fiscal 19, we're not going to break. It's the way they did it.
Very
such a jaw dropper, as well as now it's a guilty till proven innocent stock, and that's why you see yesterday that reaction is going to be magnified relative to what it would have been if they kept the unit metrics.
Dan, we've been calling them the FANG stocks for a long time. Jim Cramer started that a while ago. I wanted to talk to him about whether he included Apple from the very get-go on this. But you think it's time to stop paying so much attention to the FANG stocks because they're not going to move as a group anymore? Yeah,
I think it's going to be, you're seeing a fork in the road situation, because I think each of them have specific issues. I think when you look at Apple right now, in terms of as that pulls away into more services on the hardware side, that's really going to be more of a prove-me stock. A lot of the consumer-based names, if you look at Amazon, that's really going to be more how it's going to be valued on an AWS side versus the consumer piece. And right now, if you look at Netflix, some of the other names, look, investors are just fearful about some of the consumer-facing names. That's why I think the FANG names, you got to look at them separately. You could look at them as a group, but ultimately, I think we're definitely getting to what I view as the 7th inning of that FANG trade, and I think it's dangerous to just buy them as a group, given they have certain company-specific issues.
Which ones do you like out of them?
Look, in our opinion, Apple here at these prices, the risk reward, I view it as kind of a $5 to $10 downside, 40, 50 upside, as long as we get through this ASP-driven iPhone cycle and services starts to manifest. So I think this is one that kind of is the one that sticks out here. But obviously, we've talked about on the AWS side for Amazon, that continues to be a core strength. Part, I think, why they're moving the shadows of the Pentagon is with that JEDI deal, biggest cloud deal we've ever seen come out of the government, which looks to be an AWS, potential winner here on the Amazon side.
Okay, so what happens next, Ed? We head into this holiday season. We're going to not know exactly how many were bought, but what are we going to be dealing with at the end?
I think I'm agreeing with Dan here. I think that you have to stop thinking about these FANG stocks as a group. I actually think there are different sort of levers pushing on all these guys. I think the enterprise side of the business is going to be more important to Google the way it has for Amazon, which is they're competing on cloud services. That said, Microsoft should be in that mix in some degree, right? Because that's a big part of their business going forward. And as the internet rises, so does cloud, and so therefore all these companies have more business to bid on. That's a different sort of market pressure than looking at how many iPhones are selling.
Two things we heard yesterday that kind of play into that same thesis. Ann Winblad, the venture capitalist, said that she really likes all of these enterprise software companies because they are going to continue to see the spend coming from companies. The companies are spending more CapEx. That's where it's going to be going. And then we also heard yesterday LinkedIn, Dan Roth, talking about job demand. Lots of areas that had seen very strong job growth dropped off, manufacturing, other sectors. But one of the top sectors was in software, and I think particularly enterprise software.
I mean, what's driving the economy? It's technology and its services, it's intellectual property. These are the things where the economy is being driven from. We're not. And as much as manufacturing is a huge and important part of the economy, it's not necessarily the driving part. It's going to be technology and services.
And look at Alibaba. I mean, Alibaba, cloud, what's their focus? You look at Diane Green on Google, cloud, AWS, Microsoft, and that's why Nadella right now, if you look at who's in the position of strength, he's really top of the heap right now on the enterprise.
Satya Nadella at Microsoft.
Yep.